All right, welcome to the Explainer. Sometimes you see a headline number and it tells one story, but the real story is something else entirely. That's exactly what's going on with battery giant Excide Industries. Their latest quarterly report? On the surface, it looks like an absolute disaster. But is it really?
So, let's get right to it. What's all the fuss about? Well, just look at this chart. For a while there, Excide was doing great, really steady. And then, bam, the profit just falls off a cliff. We're talking a drop down to just 220 crore rupees. Yeah, that is definitely the kind of number that gets investors, let's just say, a little bit nervous. Now, your first gut reaction is probably to see this as a huge red flag. And honestly, you wouldn't be wrong to think that. But what if I told you this is one of those really rare, kind of counterintuitive moments in business where a bad number is actually a sign of something very, very good? So the big question is, what on earth went wrong? For a market leader like Excide, a drop this big is, well, it's pretty unusual. Did they totally mess up their operations? Did demand for batteries just disappear overnight? The answer is fascinating, and it's none of the things you might expect. The real reason for this crazy profit drop wasn't a business problem at all. Nope, it was actually a massive policy change from the government. And here's the twist. In the long run, this change is going to be incredibly good for Exide. So, the government made this huge move. They slashed the goods and services tax, the GST, on batteries. And we're not talking about some tiny little tweak here. The tax rate was cut from a massive 28% all the way down to 18%. For the entire industry, this is an absolute game changer. So, just imagine for a second you're a shop owner, and you hear that the price of batteries is about to drop by a lot. What do? You stop buying the expensive ones, right? You try to sell every last one you have in stock before the cheaper ones arrive. That's exactly what happened here, and there's a name for it. It's called destocking.
And this is the crucial part. Excide saw this coming. In fact, as this analyst report points out, they basically did it to themselves, on purpose. The company chose to slow down production and take a hit to their revenue. Now, why on earth would they do that? Well, it was all to help their dealers sell off that old, more expensive stock. It's a classic case, right? Short-term pain for some serious long-term gain.
But the story gets even more interesting when you start to dig in a little bit. See, this whole GST thing, it didn't hit every part of Exide's business in the same way. It's really a tale of two different segments. So, while the auto battery side of the business was taking this planned hit, other areas were actually doing great. The solar division, for example, was a real bright spot, really thriving. But it wasn't the perfect picture across the board. The export market faced some tough headwinds, and believe it or not, even the weather played a part, with a long monsoon season hurting demand for some types of batteries. But all of this, the profit dip, the GST change, it's really just the setup for the main event. The real story here is where Exide is placing its chips for the future. And let me tell you, it is a massive, massive bet. Through its subsidiary, Exide is going all in on the electric vehicle revolution. They're making a huge pivot from their traditional lead-acid battery business to become a major player in the future of energy, lithium-ion batteries. And look, when I say they're betting big, I am not kidding. Just get a load of this number. We're talking about an investment of nearly 4,000 crore rupees. That is a staggering amount of money, and it's all being poured into a massive, brand-new gigafactory for lithium-ion batteries. You just don't spend that kind of cash unless you are absolutely all in on the future. And this isn't some distant pipe dream. It's happening right now. They've already pumped another 580 crores into it just this year. The factory is getting super close to completion, and they're right on track to start mass production by the end of fiscal year 2026. This thing is moving fast. So when you put all these pieces together, what do you get? Is this weak quarter a sign of some deeper trouble lurking under the surface, or is it just a strategic pause before the next huge leap forward?
Well, as you can probably imagine, analysts are a little divided. On one side, you've got the bulls, who are super excited about the long-term potential. They see the GST cut, the strong financials, and this massive lithium pivot as huge, huge positives. But on the other side, you have the bears, and they're a bit more cautious. They're worried about things like rising material costs and those challenges in the export market. But even with that debate, the general feeling among the experts seems to be that this is just a blip. A one-time event caused by something good, not something bad. It's the sign of a company making a really smart move, not a company that's in trouble. So what's next? Well, everyone is going to be watching the next quarter like a hawk to see if sales bounce back like they should. But the real game changer, the thing everyone's waiting for, is any news about that new lithium plant.
If they announce a major partnership or a big customer agreement, that could be the signal that their huge bet is about to pay off.
So, with all that old inventory cleared out and a multi-billion rupee bet on an electric future about to come online, the stage is officially set. The real question isn't if Exide will bounce back, but just how big and how fast that comeback is going to be. Is the company truly charged up for what's next?